good morning or good afternoon to everyone, depending on what part of the country you are calling in from. I'd like to welcome you to the Becoming Independent webinar series. My name is Ginger Bell, and with me on the call today, I have Philip Filisana and Teresa Ballard. And today we are going to be talking about compliance. So for those of you who are joining the call, we do have the audio settings for you to be able to listen to our panelists today. You will be able to ask questions, but you will need to type the questions in there. And so I have one of my panelists who I'm going to ask to mute right now, which is probably Teresa, because I'm getting your feedback on your paper there. And so as we're getting started to remind everyone to type in your questions, and your questions go into two different places. We use a Zoom webinar and they go in two different places. They can go into your chat box, which you see on your panel there, or they can go into your Q&A box. Both of them, you have the ability to type questions in there. And so let's go ahead and practice that. And I also want to make sure that you all can hear us, because I'm actually calling in from location I'm at. I'm attending the Todd Duncan event in Orange County, so broke away from there. So I'm hoping internet is good. And I know, Philip, you are in Baltimore. And so sometimes the challenge when we're doing these webinars, when we're traveling like this, is to make sure we have good internet connection. So if you can just type in the Q&A panel what part of the country you are calling in from, and let me know how your weather is. I can tell you I've been in California since Monday, and the weather here has been absolutely gorgeous, and no different today. So thank you, Scott. For those of you who are shouting out there, good, you can hear me, that's great. If there's anything that you have as far as issues for sound while we're doing this, let us know. But that's where you're going to type your questions in. So type them in the Q&A. I can see them there on my phone, and then I can continue on with the presentation. So with that, let's get started. I started the Becoming Independent webinar series last month, and I started it because I was getting a lot of phone calls from individuals who were thinking about starting their own brokerage or non-delegated correspondent company again. And so a lot of questions were coming up, like, I know things have changed from when I had my company before. So, how do I set up compliance? How do I get started? How do I go through licensing? What do I need for marketing? All those things that if you owned a business back in, 2005, 6, 7, 8, before the crash, are different now. And so, we've done workshops. Philip, you and I have traveled across the country, California all the way to the East Coast, from New Jersey down to Florida, doing workshops, live workshops in a panel talking about, here's how you can do it. But there's a lot to it, and it's not as difficult. It's just understanding all the steps. And so that's why I started this series. It's like, okay, let's take each of the steps, let's dissect them, break them down into more digestible pieces, and then create the resources to be able to help people to do that. So that's what we've done. My goal in doing this is to provide you with information, resources, and the experts that you need about starting your own mortgage company and becoming an independent originator. Also to help you determine if this is a viable option for you right now, if it makes sense to get your questions answered, and then to provide you steps to getting started, and then the resources along the way. Because, it's funny, in the session with Todd Duncan, and he does an incredible 4-day session on, how to increase your productivity and high trust sales, he calls it. But this morning he was just talking about, instead of having a to-do list, have a to-don't list, and the things that you don't want to do, resource those out. And that's really the same thing here, is resourcing those things out. And so that's what we've done. You can register. This is a series. I know I had several of you that registered for this series that had just found out about the series. We're in the third webinar. We've got 2 more after this. I am recording all of them. You can register for the next one on Independent Originator, and then I'm going to post, once we're done with the series, I'll be posting everything there. But if you haven't attended the previous sessions, then shoot me an email. You can just respond to your registration. That goes directly to me. I'm happy to send you the links. We have those there actually on my webinar, on my YouTube channel, so you can go back and listen to the other ones. And then you can also register to get all the handouts at Mortgage Toolkits, and that's mortgagetoolkits with an S.com. And there's the last two sessions we've done, 1 and 2, and then the session handouts for this session. So you can grab all of those there. So I'm trying to make it as easy as possible for you all to be able to do this. So with that, I would like to introduce you to our panel of experts today, longtime friends and great leaders in the industry. So Teresa Ballard, compliance consultant, extraordinaire, everything compliance I've learned from Teresa. She has been my mentor for many years and just an incredible person. So Teresa, thanks for taking time out of, I know, your very busy day to be able to share information. And Philip Filisana. Philip is the president of Focus Fulfillment and provides third-party fulfillment for non-delegated correspondent lenders. And again, focus is on compliance. And that's really, Philip, what you do with your business is provide them with a lot of those resources they need, especially being an NDC, to be able to do that. So they're going to share information with us today. Here are the steps we have, and that little slide just likes to go back. So these are the steps. You can get this handout, and I've actually created a lot more to this. You can find it at mortgagetoolkits.com. And today we're going to focus on compliance. So really what you need as far as your compliance management system. So what does compliance in the mortgage industry look like? And Teresa, we have talked about this for a long time. And a lot of the reason why we are getting independents coming back out and why really everyone went into, working for a retail operation or working for a bank or community or credit union is because of what was happening with the CFPB. And so the concern is not just about the CFPB, but also state exams and overall compliance, right? And it started with this little book called the CFPB Supervision and Examination Manual. And Teresa, you go and you help companies going through the process of state exams. So what are you seeing as far as what's happening between the CFPB and state exams, which is the CSBS?
Well, thanks, Ginger. I appreciate for all the accolades. That's really nice. Compliance isn't the fun part of our business, and unfortunately, it's a necessity that we have to go through. Even I have to go through disclosure pieces and saying, I'm not a lawyer, and what I say here today is not construed as legal advice. So, and what we're giving to you is for informational purposes. But so everybody's involved with the compliance process. And with the CFPB and the CSBS, and CSBS may be a new acronym for you, but it's kind of been in the background. CSBS is really the Conference of State Banking Supervisors. And what this is it's a nationwide organization of financial regulators that covers all 50 states, including the District of Columbia, Samoa, American Samoa, Puerto Rico, the Virgin Islands. So all these regulators are connected through CSBS. CSBS then formed a network or foundation, a communication line with CFPB. So what's happened now is that everybody is communicating with everybody else. So where we've been so concerned about CFPB lately in the last couple of years, it's shifted a little bit now because of the good things at CFPB. Now it's going more into the state. The states are the ones that are really kind of taking control and doing all the examinations. And very simply, the states have a hotline between each other as well as with CFPB. So everybody is talking to everybody else. It's a little bit different than the dynamics that we had, 8 or 9 years ago. So the state issues are the biggest one. And they're the ones that are going to be looking at you from the examination. So really, what is an examination? It's different levels. There's different types. CFPB, for a CFPB exam, it could include the company's compliance management system, and that includes the product-based procedures, statutory and regulatory-based procedures. Basically, they're looking at the company from the very, very top to the very, very bottom. Whereas the state regulating agencies have their own procedures as far as exams are concerned. So each state has a regulating agency for a mortgage lender. And then there may be multiple agencies within the state that a lender could be licensed with. For example, in California, there's 2 regulating agencies. There's VRE and DBO. Well, both, if you could be licensed with both, and if you are, you would be susceptible to an examination by both agencies. Both have different processes. They're both going to be looking at different things, what their hot buttons are for their agency. Then you have another level of examination that you can have an expectation for, and that's agency, meaning Fannie, Freddie, FHA, VA, USDA. Then you may have another agency, which is the one we definitely don't want, is the IRS one, because you're going to have employees. So you would have employment audits as well. And then you've got your local ones, which would be more involved with your warehouse lender exams and your investor exams. So all of these are looking at your company, and they have the same general expectation of how your system is set up from a policies and procedures standpoint. And they all will be looking at that compliance management system.
Right. So it's not just a matter of, as they're going through schedules, and in many states that you're accustomed to that as far as when that schedule is. Used to be, it's just, okay, we're going to look at your, some loan files, send those over, things look pretty good. But now they're going through those schedules and they're asking for a lot more. And we're going to go through what it is that they're actually looking for. But in that exam schedule, what are you seeing in a lot of the states as far as how often those exams are happening?
Well, in some states, it's statutorily required. The examiners are required to come visit you within a certain period of time. For example, California is 48 months. If you're licensed with DBO, it's 48 months. For BRE, it's not as stringent in California. New Jersey, at least 9 months apart. Illinois, every 3 years. So you can expect certain states to come knocking on your door at certain particular times. Then it gets down to more of an as-needed category. If the state is receiving certain kind of complaints, they will come and visit. If another state comes in, let's say, for instance, California does an exam, and the exam doesn't go all that well, and there's some issues that have to be worked out. Well, that's going to go on the hotline. And if you're licensed with other states, you can expect those other states to come knocking at your door at some point in time, very soon after that. Recently I was reviewing a Washington State exam where they had just finished up at the beginning of April. And they had some issues that were HUD related that came up for the lender. Within 2 weeks after the Washington exam report was completed, HUD was sending had sent a letter to the lender saying, hey, we're going to come visit you and do an exam. Very big surprise how fast that communication is going now.
Right.
So the states are looking at different aspects and communicating with each other.
And they're getting a lot more information, too, from the mortgage call reports, right?
Yes. Various items on the call report could trigger exams. If you have a real big spike in production, or if your cash reserves fall down, or if you go into a new state. The call report is a barometer, and it could cause the state to look a little bit more at you. They all have an algorithm that they look at and say, okay, we're looking at the certain areas, like you're going along and you always do plain vanilla conventional loans, and all of a sudden you have a huge spike in reverse mortgages. well, that's going to, it might trigger some issues to where they want to come and visit and make sure that you've got the processes in place.
Perfect. So let's look at the compliance management system. And this is something that came out that the CFPB has in their examination guide, what they call their compliance management system, what we call a CMS, because we need more acronyms in our industry, right? And so the compliance management system then, it's made up of policies and procedures, training, and monitoring. And so what does the CFPB and most states expect a mortgage broker or non-delegated correspondent company to have in their compliance management system? First of all, do they expect something like that, Teresa?
They do. You know, basically there's an expectation by all that all companies, no matter the size or the business model, develop and maintain some sound compliance management system that's integrated into their overall framework of their product design, their delivery, and their administration of that product. So what this means is that they have an expectation that every company is establishing policies, procedures, training, and then monitoring it. As you see on the slide here, it's kind of like a wheel and it's got the spokes. You know, the compliance management system is how a company establishes that compliance responsibilities, how it communicates those responsibilities to all the employees, how it ensures that the responsibilities for meeting the company and the legal requirements and the internal policies are incorporated into day-to-day processes. That management system reviews the operations and to ensure the responsibilities are carried out and legal requirements are met. And the most important thing is that it allows the company to see whether or not they have to make any kind of corrective actions so that they can do it internally and take care of it before somebody points it out to them. So it's taking those corrective actions, developing the tools, taking care of the tools, the materials as they see necessary, so that they don't want to, the states or the examiners don't want to have to tell you what's wrong with your company or what you need to do. They have an expectation that you already know that you need to take care of it and do it.
Right. And so, you know, from what we're talking about and what we're seeing a lot is individuals becoming broker and often what I'm seeing for most retail originators that are starting their own company is they're actually becoming a non-delegated correspondent so they can continue on that correspondent channel. So Philip, you specialize in so much in that area and provide a lot of those resources from a fulfillment standard. So, you know, is there a difference between being a broker and being an NDC on what they need on these compliance management requirements?
Thank you, first of all, for inviting me today. Actually, to be honest with you, they're both kind of the same,
right.
as far as what's needed. However, you're going to be taking on a lot more responsibility as a non-delegated correspondent, right?
Okay.
These loans are going to be closed in your name, right? You're going to have to go out and get a warehouse bank in order to facilitate those loans. So where it really comes in is not as much on the compliance part, because we're finding that brokers are just need to pass compliance just as much as non-delegated. It really comes with a risk part. And the reason why most brokers decide to go the non-delegated for the control, they also have to be aware that there is a risk, but more on the monetary side, because you're still responsible for those loans. So a lot of times people think, well, because I'm becoming a non-del, it's no longer the risk. Financially, more risk, but pretty much the same as being a broker on the regulatory side of the business.
Right. But making sure that they do have those checks and balances in place also for, you know, things like ordering the wire, or if they're going to, you know, they take those responsibilities. And that's a great thing. And what you provide at Focus Fulfillment is that support to be able to help someone say, you know what, I had somebody else take care of all of this. I don't really know what to do. And same thing, Teresa at SCP. I don't really know what I need for compliance, and that's okay. There are those outsourced solutions, but still you need to button everything up and make sure that you're communicating it. And size, you look at the size. If there's, there can be a broker that's an individual broker, or an NDC, or you can have someone, and we have teams that are bringing over, their whole team, 10 LOs. So as terms of the compliance management system, does size really matter that they have to have in this? And, Teresa, we talked a little bit about, the requirement, but do they have to have this huge, robust plan, even if they are just, a smaller shop with a couple LOs?
Well, the answer is yes and no, in the fact that CFE doesn't expect a small company, to have the same systems in place that a large mortgage banking operation does.
Okay.
They expect to have a system that incorporates or is equivalent to their size. So do you have to have policies and procedures as a one-person shop? Yes. Do you have to have them as a 100-person shop? Absolutely. Is there a difference? Yes, just in the equivalent of the depth of what you're going to be looking at. And, and this is going to come from the compliance management system. It's really how that company develops and manages its internal policy. Again, going back to the size of the company. If you're small, you're going to have smaller internal policies. It's not going to go into as much depth. Procedures and controls. You'll probably have a lot more control as a smaller company because you're going to be a lot more hands-on. You need to provide for an ongoing and periodic training on those procedures. As we have new processes that are introduced into the company, new regulatory requirements, new investor requirements, there's an expectation that everybody receives that training. So they want to see the policies, they want to see the procedures, they want to see how you're monitoring those policies, procedures. Is everybody doing what they're supposed to be doing in that 1-person, 5-person, 100-person shop? The biggest thing is that you want to be able to, walk the talk as well as document, show that you're walking the talk. You've got to be able to show to the examiners and to your investors how you're managing your compliance risks and your day-to-day policies and procedures.
So it's not just enough then. Oh, go ahead, please.
I was going to interject something. I deal with a lot of emerging bankers, right? I deal with people that are trying to make that next step. And that is the biggest shock to them, is when they get audited, right, by a regulator.
Right.
And they call me up and say, why did this happen? And I think, and Teresa can talk to this better than I can, but what we find is when a shop gets to a certain size, they start seeking out compliance, right? But when a small shop decides to start their business, they don't seek out Teresa. They don't seek out compliance. They go online, they try to figure it out. And then what happens, it's too late by the time the regulator comes in. So I would advise, spend a little time, spend a little money, because what it also does is not only prevents you from having bad audits, but it kind of sets the tone for your company.
Right.
Because we see companies all the time bring on 2 or 3 loan officers and double in size because they get a superstar, right? And then next thing you know, they're like, ooh, we need compliance. Well, if they have that in place to begin with, it's not just for the regulator, it's also for you to manage your business and say, this is how we do things and this is why we do them. And so we find too often, it's kind of a joke with some of the newbies that come in and say, well, I went online and I cut and paste. Don't do that. Right? Don't do that. Spend the, and I'm sure there's different levels by different size companies, but that's the biggest shock that we hear is they call me up, say, hey, you've been doing this for a year. I just got audited. I scored the second worst score you can score. I need help. Where do I go? And that's where we pick the phone and say, you need to call someone like Teresa, but they should have done it earlier.
Right. And great advice too. And the nice thing is, Philip, when, and I worked with SCP years, probably about 5 or 6 years ago, Teresa, when we first started talking about the need for compliance management and policies in the industry, specifically for smaller independents, mortgage brokers. And, when we first started talking about, okay, guys, this is what you need, brokers would come up to me and Teresa, I know you remember this, saying, hey, we want to do it, but there's nothing that's affordable. I don't want to spend $100,000 for a compliance officer. I, don't want to spend, $20,000 for policies at all regs. And so we started searching around for someone to be able to create these that were to the level that brokers and non-delegateds needed and was affordable. And so I'm happy to say we've been able to produce this, not just with the policies and procedures, but also with the training. And so it is a great resource, and we'll share with some of that in a little bit what that is. But, when you're looking at establishing your policies and procedures, and we're seeing, especially from the states, I do training for Model Mortgage every month for their new franchisees, and that's, they 70 franchises they sold last year, continuing to build this year. And what we're seeing from some of the states is what they call intro exams. And so when someone's getting licensed, the state is actually going out at the onset and going through an exam, even without having files to look at, but the states want to make sure that they're set up the right way. To your point, Philip, that they would rather make sure that they're set up right the first time instead of coming back in 3 years later and saying, okay, you have now just scored the worst possible score that you can possibly score, when they could have prevented in the beginning. States really want to make sure that you're doing it right, not from a we're going to slap your hand, but from a point of they're here to help. And so, I think it's just being able to be grown up and to say, I'm starting a business and I need policies and procedures and I need a business plan and this is what it's going to do. And you can outsource that. So I think it's important. Brokers and non-delegated correspondents, we talked about they both need policies and procedures, but Teresa, are they different?
Yeah, they are in some respects because of the level of risk that's involved. The brokers, you have to only go up to, the stage where you're submitting that loan to your investor, okay? At that point in time, the investor takes over the loan, they underwrite it, they close it, and they go on their merry way. From the non-delegated, basically you're now in the big kids playground, in the sense that you are handling that loan through going into underwriting, the investors underwriting the loan, but then they give you a decision, and then you have the expectation of closing that loan, shipping the loan to the investor, following up on final documentation, and dealing with the afterburn of the closing. So where you would stop at stage 5 for a broker, you're going on to stage 10 with stage 8 being taken out of the equation. So it's a little more complex, and you've got to allow for your policies and procedures to adjust to that.
So with that and the difference, and that's important to be able to understand that there is a difference between the two. How about a QC plan? And Philip, I know this is one of those things that you often get called on as well, because when they're becoming a non-delegated correspondent, that's usually one of the things that they have to make sure that they have is a QC plan. So and people get into that, do they need a QC plan? But really, what is the difference between a QC plan and policies and procedures? And I'll let both of you go back and forth on this because you both have great information to share on that.
Well, the QC plan, Fannie and Freddie's an asset, right? So
Oh, Philip, I'm losing you a little bit on your sound.
Did we lose him?
I think we lost.
No, I'm here.
Okay,
there he's here.
He's back.
I'm here.
Okay, go ahead.
Sorry, hotel room in Baltimore. Okay, so QC plan and policies and procedures are kind of the same. However, QC plan is a little more official. You'll need to give a QC plan to Freddie and Fannie when you become a non-delegated correspondent, so you'll need to be registered, right? And that's one thing I don't know if we'll talk about, but I would like to bring it up, is that we find right now that when people are getting signed, when lenders are getting signed up, and typically they're getting signed up by two entities. They're getting signed up by their investors and they're getting signed up by their warehouse banks. One of the pillars of getting signed up and becoming an NDC is that you need to be signed up with Freddie and Fannie, and that hasn't been going on, right? And because of the UCD that's just come out and that we have to deliver it, everyone's scrambling right now. So I wanted to throw that out there because it's very important. That's one thing you'll need to write down, that hey, we need to get signed up with Freddie and Fannie, and that's something that I just thought everyone did until recently. We found out half our customers weren't doing that. So your policies and procedures are basically how you transact the loan every day. What goes on in your office? How does a loan get processed? How does the loan get underwritten if it's that way? And how does it get purchased and bought? And the QC plan is very similar to that, but it's a more official document that has to be delivered to Fannie or Freddie so they understand, hey, you know what you're doing and you're now official. But they're very similar, Teresa, unless there's some input you've got there. That's, you need both, but typically most people just have their QC plan and it has policies and procedures in there.
Yeah, the plan itself it's how you're measuring. It's your monitoring of what you're doing as far as on a loan level is concerned. It tells management what's going on at the very front end, and it's looking at, is everybody doing what they're supposed to be doing when they're supposed to be doing it? And it's a measurement that's trended. So this QC plan needs to outline, okay, what are we going to look at? How are we going to look at it? When are we going to look at it? And why are we looking at it? And then we're going to measure it and keep track of it for a year-long period of time, so that it's very quickly, you can look at the plan and the reports that are generated as a result of the plan and see how your company is doing on a loan level, so that you can then get down to a really granular level of how the individuals are doing their jobs and how the quality of the loans that you're producing. Because you don't want to send your investors anything other than prime quality loans. And trust me, they're going to see it. They've got to go through the same process. So again, you want to, look at what you have in-house before you're sending it to your investor, and know what's going on so that you can answer the questions when your investors come back and ask you the questions.
Right. And the policies too, and I think it's important to remember because that's one of the first requests. It's like, okay, we need a QC plan. And yes, you need a QC plan, but you also do need your policies and procedures, because your policies and procedures are going to speak to everything. Like, what are you doing for advertising? What are you doing for consumer complaints? What are you doing for social media? And it needs to cover what's required on both a federal and a state level. And I know, Teresa, that's one of the things with SCP that are hard to be able to put together, is to make sure that their policies meet the requirements for them covered under the federal requirements, under ECOA, under the Fair Housing Act, under the Truth in Lending Act, under RESPA, to make sure that they're sending out affiliated business agreements if that's what they're doing. Those are the kind of things that we're talking about with policy. So policy has to do with what you're meeting on a federal and state level for requirements, and how you're putting that procedure into place. And it can be even beyond that. It's like, our policy is when someone new comes on board, that we set up their email and we set up, and this is how their template looks for their signature, and we have to have the NMLS ID number. And I was helping a franchisee set up their social media. I was looking for examples to make sure to show them, okay, this is how you put your NMLS number in there as a company. And so, there's not an NMLS place on Facebook or LinkedIn or Twitter or Instagram. There's no little fill in the blank here. So what is it? What is your policy? Somebody's going to be doing social media. Where are they putting their information? Are you using the Equal Housing Lender logo? And you're not a lender, so you need to use the Equal Housing Opportunity logo. Those are the kind of things that are important and not super complicated, but you just need to make sure you're doing it, because that's what they're going to look at. And so with that, Let's kind of talk about the top 10 reasons for a QC plan, and we don't have to go through each of these, but I'm going to let our panelists kind of speak to anything that they would like to speak to on these, and I'll just kind of go through the list. So Philip or Teresa, whoever want to hop in on this, I'm going to put the first 3 down here for the top 10. And then any questions, I'm not seeing any right now that are coming in, but if you do have questions, post them there. So, top 10 reasons, keeping management involved, make sure that the approach is there for management, monitor and evaluate the integrity of the loan origination process is important.
And I think the biggest thing, Ginger, I want to say something about the management piece.
Okay.
And that's the important piece. If you're a small shop, yeah, you've got a lot of hands-on. As you grow, you're going to lose touch with that loan level hands-on. So you need to have a mechanism of being able to know what's going on at all stages of the loan production cycle. And the QC process does that for you. It tells you what's going on because there's an expectation. Management is accountable for all of it. And so you don't want to, become unaware of what's happening.
Exactly. And Philip, you talked about the risks involved as far as being a non-delegated correspondent. And really that's what a QC plan is designed for, right?
Right. So there are risks, obviously. The first thing you always hear about is buybacks, right? Buybacks are a big concern. Well, as a broker, I don't have buybacks. Well, as a non-del, I have buybacks. And I've been in this business a long time. And as a non-delegated correspondent, I can tell you there are non-purchasable loans, but you don't see many at all buybacks, right? And part of that is because the good thing about becoming a non-delegated correspondent is that you can function as a delegated correspondent, but avoid the risks by the investor underwriting your loan, right? Because that investor underwrites the loan, they can't guarantee they're going to purchase them, but they're pretty much telling you, hey, if you follow A, B, and C, we're going to purchase that loan. And so at that point, you've got to make a decision. Okay, based on risk, am I preparing the loan properly? Am I closing it properly? And then you got to make a decision whether you're going to close that loan yourself or you're going to use a company like myself to close it for you, which gives you an extra layer or removes an extra layer of risk because we're actually doing another layer of compliance for you on the loan itself, not your company, but the loan. And so that way, typically when you're using a third-party fulfillment company, there is no risk. If you mess up, I pay for it. If you mess up, you pay for it. So there's obviously a little more risk, but not as much going to the next level, which would be a delegated lender.
Right. So let's talk about that because that's really what we're seeing, and especially Philip, with the conversations you and I have had with individuals who are going from working for a retail operation to saying, okay, I'm going back on my own. And a lot of them are becoming non-delegated correspondents because they want to be able to maintain that flexibility and what they've enjoyed as far as working in retail. So, but the first question is, hey, how much staff do I have to get? What do I need to do? So let's talk. What do they need to add as far as staff?
Yeah, so the beauty about becoming a non-delegated correspondent is that there's very little to no staff needed, right? So when we think of becoming a bank or a banker, you think, oh, I need an underwriter. Well, you don't need that because as a non-del, you're going to use the investor to underwrite your loan, right? But then what the investor won't do is they're not going to close your loan for you. Some of the investors will do your initial CDs and your docs, but they're not going to order your wires, they're not going to ship your loan, they're not going to authorize funds, and they're not going to clear purchase conditions. So uninformed lenders or emerging bankers say, okay, I'm going to go buy a doc software and do this myself. Okay, so then I got to go hire all these employees. And that's the good thing about a third-party fulfillment company is that we do all that for you at a fixed cost, right? So the answer is, do you need staff? You don't. But the day you go out and hire a closer, that closer is going to cost you X amount of dollars no matter how many loans that closer can do. And right now, I can tell you, because I've got a number of closers on my staff, an average closer can close about 60 to 70 loans a month. So imagine if you're doing 10 or 15 loans a month, hiring a closer at anywhere between $50,000 to $75,000 doesn't make a whole lot of sense, right?
Right.
That's why you would either use the third-party fulfillment company to take care of that for you, and you know that fixed cost, or you go to some of these investors that will draw those docs for you or do CDs for you. And I can actually work with those guys as well, because you'll still need to place wire orders that they can't do. You'll still need to authorize funds and ship, which investors can't do for you. So there's always opportunities for both of us. But you don't really need anyone. There will be a time, and if that time comes, that's a great day, because it means you've really grown, and we can actually walk you through that and help you get to that point where you decide, hey, I'm going to start hiring staff for that. But as an emerging banker, going into that first few years, and some never leave it, even when they do get very large, there's no need for additional staff.
Right. Well, and that flexibility too, to be able to have that ebb and flow depending on how their business is fabulous. And just that peace of mind to be able to say, hey, you are my outsourced solution, to be able to do that. So if you have questions, and I'm going to check our little chat box here to see if we do have anything down there. I'm not seeing any questions right now coming in. If you do have questions coming in that you'd like to ask to Philip or Teresa, please type them in your Q&A session there. I will answer a couple questions. Sean and Andrew, you had asked if there was a way to get the first 2 seminars, and the answer is yes. So if you go to mortgagelists.toolkits.com, you can see that there. I'll show it up in a minute. And then Andrew, you're coming in late, which I totally understand. Thank you for being here. And yeah, so I am recording this webinar. I will send out a copy of the recording from today's webinar along with the handouts, and you'll get that in a follow-up email tomorrow. But you can also just register to get them and have access to that as well. And so have a couple of questions coming in. First question, for a small broker, what is the cost of outsourcing compliance? And so, we have actually a great package I'm going to share with you in a minute, but, Philip and Teresa, in your opinion, does somebody need to, if they're, a small broker, what do they need to do as far as compliance? What are the things that they need minimum-wise to get started with?
Oh, well, the first thing is their policy. They need to set up their policies, and that's something that with SCP, we have what we call our real-time product, where we can give you the policies. We go through them with you. We supply you the policies, but you then go through and say, okay, I can do this, I can't do this, and then we kind of manage it from that standpoint. So you've got your policies that you would need to supply to your investors and then your any agencies that would require them. And then you have a certain number of hours. There's going to be times where you're going, well, geez, I'm not sure I should be doing X, Y, Z, am I supposed to be doing A, B, C? And that's where having someone who's focused in compliance can assist you, can do the footwork, the research, and give you the answers. Or say, okay, this is a legal question, we need to push this up to the legal side. So it's really kind of looking at that. Can you bring on and have a full-time compliance person? That all depends on your own purse strings. But having a system where you've kind of outsourced that compliance piece is very, very economical.
Exactly. And making sure they're compliant too. So I have a question in from Troy, questioning as far as it saying, I understand the benefits of NDC versus broker, but what are the benefits for delegated versus NDC? And we actually did, Troy, talk about that on our first webinar. So we'll make sure you get a recording of that so you can listen to that again. But, just real quick, Philip, your quick little benefits of if they are looking at being a delegated versus an NDC.
Yeah, I've been there. I've been on that side of the fence. So I've been a delegated lender and a non-delegated lender. And it really comes to 2 things: money and control, right? So when you're underwriting your own loans as a delegated lender, you have more flexibility. You think you do, right? But what ends up happening is you start putting overlays on yourself, which is interesting because we all do it to get out of the overlays. We we end up putting more on ourselves. But it gives you better pricing. I mean, most investors are not looking at holding your hand any longer, right? So you have control over the underwriting. You take care of all of your closing and post-closing. It gives you the pricing where if you look at and I can't give you exact prices because I'm not an investor, but the pricing is substantially lower on that end, on a delegated end than it is a non-del end. But it also requires higher capital requirements, right? So if you're going to go non-del, if you're going to go delegated, there's going to be warehouse banks that are going to require a higher net worth, right? You're going to go to investors that can give you better pricing, say like a Wells or say of a AmeriHome or someone like that, or PennyMac. They're going to offer you better pricing, but they're going to require you to have a $2 million net worth, right? So there's differences in entry level, right? But it really comes down to risk and the amount of money you want to make on it. The delegated side, without getting too much into it, it's becoming more of a commodity where investors really don't matter to whoever's got the lowest price. And what you end up doing is your loan officers are basically looking at whatever the lowest price that day, and that's what they're selling. And then what ends up happening is you have more control over those loans and being able, this really get into it, but be able to hedge those loans. So now it becomes more like a brokerage, not broker, but brokerage transaction in a true sense. So there's definitely more risk. And I can tell you, my first client, and we were doing about 150 loans for a delegated lender. We were underwriters messed up. We went back. we went back and eliminated the risk.
Very good. And Philip, you're breaking up just a little bit, but I'm going to, so I'll let you adjust that. And then I'm going to let you get on to your information because we actually have a couple of people that are requesting your contact information and what services you provide. And I'll let you reach out to them to answer questions that they have specifically on your services. But tell us some of the services you do provide and contact information, obviously.
Sure. Again, thank you for having me today. And Ginger, we've done a lot of these in the past, and they're always very important, very helpful. I learned something today with Teresa being on the call. Focus Fulfillment is based out of Dallas, Texas. We are a stock prep fulfillment company, so we take care of everything from your initial piece on.
Oh, Philip, I'm going to stop you because I'm getting a lot of feedback, and I want to let people be able to understand you. So I'm not sure if you can straighten your headset or do something just to make sure.
Okay, how about now?
That's much better.
Better now?
Yes.
Maybe I just talk too loud. That's probably what my wife always.
Is that what it is? Maybe.
Right. It's usually talking too loud. So what I was saying is Focus Fulfillment is based out of Dallas, Texas, and we handle all of your CDs, doc prep, and fulfillment. Fulfillment, I mean ordering your wires, authorizing funding, and post-closing. I don't do processing, but I can definitely help you out with that. I've got a number of business partners that sub that out. So if that's something that you're looking for, I can definitely help you with that. But I do, like I said, I do all of the fulfillment piece and all the doc prep piece. And we don't have any minimums. If you do 1 loan a month or 100 loans a month, we can help you with that. One thing I do want to mention is we have a lot of clients that end up using investor docs, and the investors tell them, don't worry about it, we do everything else. That's not necessarily true. You're still going to have to order your wires. You're still going to have to authorize funds, and we can do that at a substantially lower price and help you out with that as well.
Yeah, I mean, truly, truly, and the thing, Philip, absolutely love working with you is you're such a patient teacher, and I know you and I we have a couple mentoring groups that we work on, and you're always great about being there, and so I truly appreciate that, just to find someone in our industry who has started a great company, provides a great service, and gives that support, but also is a great educator. So I want to thank you for that. Okay, and so for Teresa, Strategic Compliance Partners has created what we call real-time compliance. And under real-time compliance, it includes a variety of things, and you can find information at mortgagebrokertoolkit.com to go and get some information. But really putting this together, what does it include, Teresa? And, all the things that we talked about really that they need, it's kind of like just that compliance in a box, right?
Correct. Basically, the federal and state policies that you would need, the compliance coach consulting. So you get a certain number of hours per when you sign up. So depending on what your questions are, or getting something set up, I get a lot of questions on advertising, where we review advertising before you send it out. Or you have an exam coming in, we can help with that as your examiner is coming in. The other piece is the online compliance training. Everybody has to do anti-money laundering training, and that doesn't just, I know a lot of the loan officers get this training when they do their annual CEs, but the anti-money laundering has to be done by all people within the company that's customer faced. And this is from the top person to the lowest person on the totem pole. So that's training that's offered online, and it's at a very reasonable price. The biggest thing is that it maintains the tracking. So you could set up and assign training to all your staff in fair lending, which is a big issue, cybersecurity training, money laundering. Those are all pieces that you want to have training on, that the examiners are going to ask you to see. What are you training on? How are you training? And what's the tracking record? So you have that all in one spot, and you'd be able to pull off a report very quickly and give it to them. So it is one simple solution to multiple functions that you'd have to take care of.
Right, and the price, absolutely amazing. I mean, it's a $299 one-time setup fee, $275 a month, and then $15 per user, so however many employees you're putting there. And so that includes, your federal policies, your state policies that you need, kept current and in real time. So if there's a change, they're up to date. And then the training you talked about, and then access to a compliance coach, which, Teresa, I mean, I know how many times I've had questions like, my gosh, I need to phone a friend. I need an answer. I need to call somebody. Just being able to have that is so huge. So I want to thank both of you for being on the call. And I also want to introduce you to a group, a new association. You may be familiar with it. It's called the Association of Independent Mortgage Experts. And it was started honestly just 2 months ago, and it was started out of a need. It's like, you know what? We're a group of independents. We work independently. We don't work for a retail operation. And Anthony Plaza is the president and one of the founders of this group. Anthony's actually happens to be in California, and so I'm going to have a chance to meet with him again this afternoon. But it's a great members. $79. Join. We're working on getting a lot of resources together. I know they had their launch in Southern California, had over 600 independent originators there, guys. Having that resource, having that support is so important to be able to network. And so, join the association. It's, strength in numbers. We know that. And so having that resource there is very, very important. So go to Mortgage Toolkits. I know a lot of you have asked if I can send you everything. It's like, I can't. Honestly, guys, I'm traveling. So I put everything into one link. You have to go there. I can't send you all an email over all the sessions we've done. I love you, but go to this website and you're going to get everything. So you can do that. And then register for the first session, the second session, third session. I've got 2 more sessions coming up. May 22nd, we're going to talk about marketing. So website, social media, marketing. And then June 5th is going to be a wrap up. It's like, okay, what are all the questions that we had? What do we need to wrap this up? And then in the fall, I'm going to start, okay, now you've gotten started. So, what's the next step? What are the additional things that you need? So if you are thinking about going out on your own, I do want you to know you are not on your own. There are great partners like SCP, like Focus Fulfillment, wholesalers, Finance of America, UWM, Plaza Home Mortgage, Strategic Compliance Partners. Got a marketing guy coming in that has like this top secret how to get your geo stuff set up on your website. We talked about licensing with integrity mortgage licensing. So that's my whole goal, is to be able to put these resources together for you all to help you. So let us know what additional questions you have. I want to thank everyone for being on the webinar. Philip and Teresa, thank you so much. I truly appreciate you and all that you do. And of course, this is our legal disclaimer to remind you all that everything that we've said is important information for you, but you do need to make sure that you're doing things correctly in your business. And so we wish you great success in doing that. We're here as a resource, and go out and make it a great day. So thanks, guys.